Good morning, guys. It's Monday, the 8th of July, and I've just been triggered into a long position on the FTSE 100. So, after this big bullish candle at 11 a.m. As always, I'm going to talk you through the trade analysis, I'll talk you through trade management, and we will see how the trade then gets on. Coming into today, this zone down here for me was very important as support. You can see the little key written right here to remind me that it is a good level of support. So the bounce came unfortunately at 650. So before the market opens, before I'm watching the charts, we got the bounce, a little bit of a pullback, and then we got a huge bullish movement. So around about 40 points, which for the FTSE is pretty big, especially with the low volatility that we have been having. Now, we got up into the top of this zone, we rejected a couple times, into a double top with a big sell-off. So the market has been the past couple of days has been pretty bearish, but overall the market is still holding bullish. So when we've seen this big strong sell back down, we've already tested that key support. For me, as we started holding down here, it's a good level for potentially the bulls to try to step back in once again. Now, I'm not really looking for a big move. I'm more looking for a scalp. Let's see if I can use this rectangle. Yeah, so sort of up to this sort of level up here. Because we've had a double top. If we do start retesting into that center point, into that MA200, likely the sellers will, even if they don't drive the market back down, likely they will step in. Likely it's a good area for profit taking. So I'm just kind of looking at it as if it is a little bit of a sort of scalping bullish movement back up to these levels. On the big rejection, as we started to come down to these levels, you can see the rejections, yeah. Really, if we take this high down to this high, you can see the market pressing up against it. So very, very small, not overly significant trend line, but still just another little confluence. The market rejecting multiple times here, holding at this level. And then we break back up above it with the engulfing candle. So quite a few different things are working together. Looking like, hopefully, some sort of a bullish bounce. As I've mentioned, mainly looking for a scalp. It's kind of been quite quiet, sort of the past, I would say past month. Well, last month, I've not done a video for a while because I have been on holiday. But it kind of looks like I chose the perfect time to go on holiday. Now, I had no idea it was going to happen, but we had very low volatility across most markets. And when that's happening, it can become more difficult to trade. Usually you see it around about summer, sort of July, August, but it's kind of June, July, August, and start of September. During that period, there's very often a 2, 3, 4 week period where the markets quiet down. Now, when the markets are doing that, it's almost always the correct approach to just get more cautious, to take less trades, to understand that you're trading in a market that is more difficult. What tends to happen, what I see all the time, everybody does this, when they're learning. This is what I used to do. They continue trying to trade the same way, even as the market changes. So what do I mean by that? I always say that winning traders are not made during the winning times. It's easy when the markets are easy to just take lots of nice trades and get your wins. Everybody goes through those phases. But a consistent trader, professional trader, is made when the market becomes difficult. So when there's not the trading opportunities, when the market's volatility drops, when your setups aren't coming along frequently. Because after a good period, people try to continue with that, or they think that's just how it's going to be, or even worse, they start to believe that they have figured it all out. And so they continue trying to trade in the same way, and what happens is they have those periods of wins, and then it turns around and comes crashing back down to earth, and then they have to restart, and it goes up again, turns around, comes crashing back down to earth, and they don't really ever understand that they're trying to trade the exact same way, and forcing their trades when the market isn't giving them the opportunities. I mean, I would say I'm kind of like too extreme the other way. I'm too cautious most of the time. I'm only really looking for solid setups, and if I don't, or if there's things going against the trades and it's not a key zone like this, I will just skip it. This is the kind of zones where I give a little bit more room, a little bit more ambiguity, where I'm willing to take slightly higher risks. But for everything else, I'm just not doing it. And it's key, if you want to become a consistent trader, to understand that every day at the markets is different. And when I say different, I mean that some days there's going to be nothing for you to do. And the best thing you can do on those days is nothing. You can just not trade, because although you don't think you are doing anything, you think to yourself, I should be working, I should be advancing, I should be making money. What you're actually doing is protecting your account. And if you take the dumb trades, what happens is your account drops. So on those days when you're doing nothing, you are actually sort of causing huge benefits to your trading, because rather than the account dropping, it's staying the same. And that is a massive positive for a trader. If you understand that it's not setting up properly, and you understand that historically when you trade, when it's like that, you lose money. If you don't trade, you are at an advantage. You're holding your account. You're waiting for when it's good again, so you can start slowly building your account once again, going through the regular wins, the regular losses. Okay, so with this trade, there's not really a lot else to go over. You can see we've got pretty low volatility. The candles are pretty small. We've been holding at this level, not really doing anything. There's potential resistance up here at this previous swing. But the way we're holding, I would hope that we'll see a little bit of a stronger press, at least up into this level here, and likely up into this target area. So we'll see how we get on. The market is very quiet just now, but that is what I'm looking for. Minimum move up to here before I'm really making any decisions. This level up into this level is where I would consider coming out if the market starts to stall, but this is the main profit target. So I'll pause the video, turn it back on if the market starts to move one way or the other. Okay, so that is the trade closed out, around about £360 of profit. I got out ever so slightly earlier than the rectangle, just because the MA200 had just started to pull underneath that level. With the market being much quieter, lower volatility also, there's my entry, 5, 10, 15, 20, 25, 30, 35, 45. That's an hour for the FTSE to, 55 minutes for us to move 5 points. And then we got the rest of the move in this one candle. So more than happy to get out and to call it a day, take the nice profits and run. So with the FTSE today, the main sort of thing I was looking at for this being support was the previous swing down here. So previous swing confirmed by the rejection on the 1st of July. Market's broken up, it's pulled back down. It's tested into this whole level. We got the bounce early morning, we got the pullback once again, and that's where we got the position, which was this engulfing candle at 11 a.m. So really good trade, nice and easy. Took a long time, but didn't, wasn't too much bearish movements that came into the market. As always, guys, I hope that was helpful. I hope you're all having a good trading week, a good start to July. I'm James Orr, and thank you.